Hey, welcome to another episode of Digital Dental Marketing Made Easy. I'm Natalia Pross, your host, and today I have a guest speaker, Michael Martella, who is a senior investment advisor for Assante Management. Today, he's going to be answering 3 pressing questions regarding finances and investment for dentists and dental practices. Make sure you stick until the end as Michael went through a lot of very good points, and I think you're going to want to take some notes for this one. He talked about taxation efficiencies for a dentist and its dental practice. He talked about why it's important for female dentists to have a T4, and he talked about having a salary versus dividends or having both, and what's the best option. Hi, Michael. Thank you so much for being here today with us at Digital Dental Marketing Made Easy.
Thank you. Thank you for having me.
So Michael is a financial investor who works specifically with dentists, doctors, and entrepreneurs. I'm going to let yourself introduce your background and your experience to my audience, Michael.
Great. Thank you so much. So yes, I'm a senior investment advisor with Assante. I have been specializing in medical professionals and dentists, of course, since the early 2000s. I started my career off in 1999. I basically, pride my services and my offerings to dentists based on, taking a look at holistic planning. And then this gives me an excellent clarity on what macro processes need to be implemented for that specific client.
Okay. So now, thank you so much, Michael. Today, we're going to be going over some 3 pressing questions that dentists may have specifically related to their finances. So Michael is going to be covering 3 really good questions today. So the first question that we have, Michael, is how a proper plan for dentists can help manage cash flow.
Yeah, so a lot of times, I noticed, Natalia, that a lot of dentists are kind of a little bit all over the place when it comes to cash flow, okay? So they might have the proper setup with regards to a corporate structure. So some dentists are incorporated, some are not, and that all depends on their personal situation and personal financial situation. But let's assume that they are. It doesn't end there. So incorporating the practice should not just be the one-off and that's it. That's the beginning stage of proper planning, which will end to proper cash flow. Understanding debt management, understanding the any debt that is carried by the clinic itself or by the dentist personally should be properly managed. If interest rate on that debt is too high, the offering of that obligation is not favorable to the dentist, no one's going to come to them and say, hey, I think you could do better. So hence where the advisor's role should be to analyze the debt. Remember, if the debt of the practice is at Bank ABC, Bank ABC will never go back to that dentist or clinic and say, look, I think we could do better with regards to rate and or conditions in the contract. So it's up for somebody else to come back to the clinic and to the owner. And this is very, very key because a small change in percentage, let's say of a debt of, let's say, a quarter point, could mean hundreds, if not thousands of dollars of interest saved over the course of a year, which can then be allocated to other things, which let's say marketing, business development, savings, whatever it may be. So having a proper cash flow, and this can only be, brought to the table and shown in full effect using a roadmap, right? Having the cash flow and the situation of the dentist properly analyzed, then I'll be able to come to the dentist and say, look, this is your current situation with your cash flow. And it doesn't mean just debt. It could be accounts payables. It could be, you know, mismanagement of, let's say, bank accounts. There might be an overabundance of insurance policies. Whatever it may be, the cash flow of the clinic and the dentist will be analyzed. And then I'll be able to come back with an appropriate recommendation. You know, you're paying too much interest. You have too many bank accounts. You don't need them all. You know, you're spending way too much on, let's say, this type of insurance and maybe not enough on one. So cash flow, Natalia, is extremely important and needs to be properly assessed and analyzed.
Right. So Michael, what I'm hearing you say is you would do a sort of like an audit for a dental clinic to really be able to identify some of the different things that are being done that are either affecting the cash flow or could have a better effect on the monthly cash flow. Let's call it that way, correct?
Absolutely. Every clinic, every dentist should have a proper cash flow roadmap where they have an understanding of where their money is going and if it is spent or allocated efficiently. Mm-hmm. And if it's not allocated efficiently, I will then bring it to their attention and give them solutions to that issue.
Michael, do you think that you could give us maybe an example of a dental clinic, no names, of course, of something that you were able to identify as an inefficiency, perhaps, or something that could have been improved on?
Absolutely. So, you know, I'm thinking of basically a few examples here. One of them is inefficient use of debt. Okay, that's clearly the largest, you know, issue with regards to dentists is that, you know, especially at the beginning, how much debt are they carrying? So I remember one particular case where the dentist was carrying a loan amortized over 7 years. The interest rate was okay, but not the best. And then they had some inefficiencies with regards to overhead insurance, overhead disability insurance. And I remember analyzing this file, and the dentist was super busy, as they should be, and as most of them are. They don't have time to second guess the professionals that they hired to give them advice, right? So if they won't second guess their accountant or lawyer for setting up the structure and then, you know, just letting it go. They won't necessarily second guess the banker who sets up the investment or the loan to, let's say, whatever, maybe equipment or renovations. They'll just let it go, right? And it is what it is at that time. Mm-hmm. So I remember I was able to rework the loan for that client, rework the overhead disability coverage and the buy-sell agreement because it was a partnership. And we ended up saving approximately $725 a month, okay. Right? And that's okay. It's maybe for some that might not be enough, but it was a small exercise, right? It didn't take me that much time to realize that there was an issue. There was a lot of work on my end involved, but at the end of the day, it was an excellent savings for that particular file.
Right, and you know, like those $750 or $725 could be used towards marketing, Google Ads, you know, Facebook ads, all of these other things.
Absolutely, you know, and I remember very specifically another client that was extremely inefficient with regards to taxation. Mm-hmm. You know, like they were making a lot of, their sales were fantastic. Mm-hmm. Their setup wasn't structured properly. Their corporation was paying, they were declaring something like $40,000 a year of passive income. Mm-hmm. And passive income is heavily taxed. So, you know, at the end of the day, I just brought to the attention of the dentist, listen, you have this passive income in your corporation. It's extremely inefficient with regards to taxation. You know, great. I'm happy that you're yielding and you're making these returns, but did you know that you could shelter those returns, or most of them, or gradually shelter them and not pay taxation? Because tax rates, tax rates for passive income inside of a corporation are approximately 51%.
So Michael, can you just explain what would be an example of a passive income for those who don't know what
Yes, absolutely. So a passive income for any corporation, especially for dentists, is any income that you declare that is not related to dentistry or selling of dental products. So if you have a portfolio and that investment portfolio either collects interest, dividends, capital gains, rent, if you own a building, let's say your practice is in the building that you own, but you have other tenants and you collect rent, the profit on that rent is called passive income. So it's great to collect passive income, and you'd want to collect as much as possible because that means you're doing very well, but there's a way to control it, right? So if you could bring down the declared passive income from 40 to 20, you're saving thousands of dollars per year in taxes.
Okay, that's really good to know. I have a question for you, Michael, and it's on the subject of dividends and salary, right?
Yeah.
More for the actual independent dentist, and how to take a look at how much dividends to take and salary, and whether, for example, dividends should be taken out on a quarterly basis or monthly basis, and how could it be done?
Yeah, so this is a really good question, Natalia. The very broad answer is it really depends on the dentist's particular situation, okay? So I see a lot of younger female dentists taking, or should be advised, take a T4 salary because of the possibility of taking some time off to grow their family if that's in the cards. Some other dentists, let's say let's say male, younger, they'll take a dividend. To be completely open and honest, if you actually do the math, the benefit of taking out a dividend has diminished when you do the entire calculation of personal versus corporate. And this is something obviously that the accountant will be able to explain in detail because, like I said, every situation is different. But I prefer that my clients, or at least the ones I talk to, take a T4 up to approximately 155,000. Okay. And the reason why I usually recommend a T4 up to about 155 is it gives them the ability to deposit money into either a pension plan to maximize the ability to deposit money into a pension plan or an RRSP, which once again, when we're talking about efficiency for dentists, is extremely efficient, especially on the passive income side. So I would usually recommend a T4 of 155, and then the difference, you could take it out as a dividend, I don't mind. Now, when you take it out, I usually recommend, I like my clients to have systematic fixed income, meaning that they know every month approximately what they're going to get. Some take their dividends every quarter. Some take it out twice a year. Some take it out once a year because they don't really need it, but it's kind of there at the end to top up anything else. But the majority of them do take it out on a monthly or on a quarterly basis, just to keep things as systematic as possible.
Okay, great. That was very good. Good insights there, Michael. Why don't we move on to the next question, which is how appropriate is it to have investments in certain accounts?
Yeah, so this is
the appropriate investments in certain accounts.
Yeah. So this is a great kind of lead in from what I was talking about before with regards to efficiency, right? So a lot of times I see dentists saving money every month, but they're just kind of throwing it out there, right? So they have their corporate profits and they're just dumping money into their corporate investment portfolio. They're just randomly buying, condos because for some reason people believe buying a condo is a profitable business venture. Unfortunately, that's not most of the time, not necessarily the case. And you could easily calculate that. and some people just dump money into RRSP and TFSA without understanding the possible consequences of doing that. And more importantly, the type of investments. So it's very important to understand, once again, the efficiency of taxation. Mm-hmm. Capital gains, as of today, is taxed at 50%, which means that half of your gain is tax-free, the other half is taxable. Dividends, let's call it 30% of it is taxable. 36% of it is taxable, and interest is fully taxable. Okay, so dividends, you'll pay tax on about 70%, give or take, and 100% on interest. While as capital gains, you'll pay tax on 50%. So it's important to have investments that pay interest, like rent and bonds, in sheltered accounts, so you don't pay tax. Because if you collect $100 of interest and it's in the wrong account, you're losing $50 to taxation instantly.
What are examples of sheltered accounts?
Sheltered accounts are RRSPs, TFSAs, and PPPs, which are personal pension plans, which unfortunately, for some reason, a lot of dentists don't quite understand, or it hasn't been brought to their attention, the power of what a pension plan actually is, right? And then there's other tax deferred or tax-free growth investments, like investing inside of insurance policies as well. So understanding that these investments do exist and should be used for cash flow purposes is very, very important. And that's where having a proper roadmap is important, right? So if I analyze a doctor's cash flow and I analyze the savings capacity of the corporation and the individual, I'd be able to come back and say, you should be doing this much, you should be investing this much here, this much there, and this is the result. And look how much more efficient this plan is versus the one you're implementing right now. And sometimes that's not the case. Sometimes they're running their investment plans quite efficiently. But once again, if they don't have that analysis done, they'll never know.
So that's tying it back to the first part, which is an audit or an analysis. The third question we had here, Michael, was how the possible capital gains tax change will affect dentists moving forward. So why don't we first explain what that change is?
Yes.
And then how it's going to affect dentists.
Yes. So there is no change set in stone right now. It is more speculative. However, in the circles of large accounting firms, it's more than just a whisper. And this is going to be the result of the federal government trying to grab as much money as possible to pay for the money that they spent on the COVID relief programs. So the vast majority of the larger accounting firms believe that the government will increase the tax rate on capital gains. Mm-hmm. So as I had mentioned before, capital gains is the most favorable type of taxation, if you will, that you could pay, because half of it is tax-free and the other half is taxable. So if you make $1,000 capital gain, 500 is completely tax-free, while 500 is taxed at your tax rate. They might increase that. The understanding is that they would like to increase that to match or be very similar to the dividend rate, which is around approximately the 75% taxable, which means that you'll only benefit from about 25% tax-free, while the other 75% is taxable. So that's a huge difference. Mm-hmm. And what that means is now it's very important. Before, being efficient on your investments was extremely important. And the larger the portfolio or the investment or the investment capability of that dentist is, the more important it was. If in fact the laws change with regards to capital gains on passive income, we haven't even talked about selling a practice yet, but on passive income, it becomes even more important that they have a proper audited investment roadmap that gives them insight onto what they're going to be doing moving forward that makes their investments extremely efficient. Putting money in a non-registered account, that's great. Like investing in your corporation, fantastic. That's why dentists incorporated, right? To get the reduced tax rate. But if it's invested inefficiently, then you're not really utilizing the corporation to its full potential. So hence the power of PPP and CIRP and all of that. So it becomes very problematic if the government will implement the capital gains change, the tax rate for capital gains change for dentists that have saved up money in their corporation. For the sale of the practice, what happens now in theory is it's a sale of a business, and there is a once in a lifetime capital gains exemption of over $800,000 per shareholder, right? And that could be exaggerated by the use of a family trust. So if a dentist sells their business for their practice for $2 million and it's properly set up using a family trust, they're able to allot that $860,000 to 2 or 3 people, and then the entire amount would be tax-free. There is no real rumblings that will be changed, so that's a good thing. Okay. The other rumbling was primary home, which I really can't see where that's going to happen, because that would be damaging. A lot of people believe that it will damage the real estate market in Canada, where they'll make your primary home, you'll lose the capital gains exemption on your primary home. So if you bought your home for $500,000 and then sold it for $1 million, the difference is taxable, which is completely nuts, and I hope that doesn't happen, because it doesn't make much sense from an economic standpoint. They'll raise.
So I have a question there. So what you're saying is that, okay, you're selling your practice and you're getting a one-time life exception on capital gains on the sale of your practice. However, sure, what you're saying is that there's speculation that there would be, though, no exception at that point if you do sell your primary home, your primary residence.
Yeah, so that's the other thing that's kind of out there.
Okay, but that's not the case right now, right?
It's not the case for now, yes. Okay. And if from what I gather on the discussions from the, with the large accounting firms and legal firms, is that the first one, the capital gains on passive income, is highly likely. The second one, which is the taxation of the sale of your primary home, is less likely. Okay. But weirder things have happened, right, with government. So I would definitely say that, like, I'm preparing my clients for the understanding that capital gains on passive assets will increase. Mm-hmm. So I am aggressively talking to my clients and my prospective clients and anybody who wants to listen about the importance of having their investments extremely efficient moving forward. Because even if I do a great job and earn really good returns for a client, if we're giving 40% of that away to the government in taxation, where I could have sheltered most of that and kept that in the client's pocket, that's the importance of having an audited wealth plan for dentists.
So I'm also hearing you say that as a dentist, you should surround yourself with professionals that are giving you the right advice at the right moment, such as an investment advisor, an accountant, a lawyer, a marketer, for example, as well. So just have the right advice so that you are being efficient in everything that you are doing.
The one thing I always tell the three top client bases that I deal with, dentists, doctors, business owners, is just focus on what you do best.
Mm-hmm. Yeah.
You're a dentist and you run a clinic, run it. And there's even people to help you run the clinic, but be a dentist, be the best dentist possible, be the best person you could be the best family member to your family you could be. Everything else should not occupy that much of your energy and time, mm-hmm. whether it's practice management, whether it's marketing for your clinic, whether it's legal, accounting, banking, and obviously on my end, investment advice, right? And wealth planning, insurance. You need to be surrounded by professionals that you trust, that maybe your colleagues work with, that specialize in you. Mm-hmm. So dealing with someone who specializes in dentistry or with dentists is extremely important, in my opinion. Mm-hmm. They understand your philosophy. They understand how hard you work. They get it when, I receive text messages from my clients at 7 o'clock in the morning. I receive it at 11 o'clock at night. And I understand that it's not them just being, hey, let me just randomly text Michael at weird hours. No, that's when they're free, right? So, and I get it. I understand it. I've been dealing, just like you, I've been dealing with dentists for a long time now. So I get it. I understand them. Mm-hmm. So surrounding yourself with professionals that understand your field and you is key to growing your business, making it successful, running it as efficiently as possible. And the most important thing is avoiding mistakes.
Absolutely. Michael, that was so informative, everything that we talked about today. Where can my audience contact you or find you for more information?
Thank you, Natalia. So I'm easily available to be reached by cell phone, which is 514-497-7219. They can contact me by email at mmartella@assante.com. That's ASSANTE.com. You can visit my website, which is very simply michaelmartella.com.
That's Martella with double L, correct?
Double L, yeah, MARTELLA.
Perfect. Michael, thank you so much for being here today. I think that we addressed several very pressing issues that dentists need to be informed about right now. So thank you so much.
Thank you for having me, Natalia. I really appreciate it. Thank you.
Of course. So I thought that was a great interview with Michael Martella. As usual, with every single video, we have a freebie that we'd like to provide you. This week's freebie is a webinar on demand that talks about the 3 social media tactic changes that you need to be implementing in 2021 and beyond to get success in your social media strategy for your dental practice. I'm going to leave the link in the description of this video below. Let me know also if you have any questions or comments in the comments below. I will see you next time, same place. Bye for now.